We got Mr. Jimmy Lee joining. Maybe we go straight to Jimmy since we're having discussions here about what advisors want and what's hot in the ETF market. Jimmy's joining us, a wealth consulting group, a sponsor on the show, but 15 episodes. So we're glad we finally got you here, Jimmy.
Great to see you, Ollie.
Likewise, I should also introduce you as the biggest advisor in Vegas as well. We were hanging out in Vegas a couple weeks back for the Hood Summit. Then I went to Munich, Germany, and then you went to California. It's been like the season of conferences.
It really has been. I was at Future Proof. It was a great conference. I think that they've disrupted the conference industry for financial advisors. On the beach is hard to beat. A lot of great content, not the typical content that you hear at advisor conferences. So it was a good experience.
Yeah. One of the things, my big takeaway between Robinhood Summit in Vegas and then the institutional-minded RMC in Munich was that both those categories of traders were all glued into options. But then I also feel, Jimmy, that a lot of the stuff I'm seeing in the advisor world increasingly is about options too. Case in point, the auto-callable funds, swaps, derivatives of different forms, and ETFs trying to make their way into the advisor world.
It really is. You've seen a lot of it in the ETF structure now, as you were just talking about, but also we've been using them inside of structured notes. And so, I see that trend continuing to get even bigger. And I think more and more advisors are looking to put in some downside protection. The ETF is an interesting way to do that, so that it's a very easy kind of a non-complex product, so to speak, for advisors to use in any sort of a retail account. So I see those types of option strategies inside of ETFs continuing to get market share. And I also think structured notes are going to continue to do what they've always done with option strategies inside of them, and a lot, maybe even new strategies that the traders will come up with.
Jimmy, is there an irony? What is your take on what I've described as kind of the irony that all these funds designed to protect from the downside are becoming hugely popular in a market that has so few moments of downside?
Well, at least hedging strategies usually, Oliver, come out after the bear market. And then it's usually the worst timing to use hedging strategies, right? And so at least this time around, advisors are interested and their flow is going in when, some people would think that the market's expensive. Now, we've been bullish all year long, and we have not been in the recession camp for the last several years. So we've had a nice run at our firm since 22, which was also an interesting year, right? Where the stock and bond markets were both down in tandem the most, I think, since the Great Depression in the combo strategy. And so I think since then, advisors, have been a little bit remiss about the volatility because we haven't had a whole lot of it until this year. But that V-shaped recovery, as we know, has come back, incredibly strong. And we believe that there's a chance that the S&P 500 could get to 7,000 even before year end.
I mean, NVIDIA's breaking out today. Tesla's breaking out again. Semiconductors, it's hard to really figure out the bear case, Jimmy, until something comes, very apparent, whether, it's in the market structure somewhere, but it's a very hard thing to know. It doesn't seem like there's a lot of big, obvious risks in my mind. Maybe that's why people, though, start to think about protecting downside because they've had so much upside, right? Preserving their capital.
Yeah, and I'm so happy that you're doing your show there at the CBOE. I mean, I don't think a lot of people have an eye into the floor there, like we're seeing now, and it's like the good old days at the New York Stock Exchange, right? And so I think it's a great job that you're doing there, and
Thanks,
great
Jimmy.
great exposure there for the board there. So anyway. I think that there are some other trends evolving in the advisor industry.
What did you take from Future Proof? What stood out? Was it some of these themes from the ETF world of like options-driven stuff, or what else was hot?
Well, certainly a lot of different, ideas, new ideas when it comes to product and investment strategies. But one of the trends that, one of the things that I think is going to get even hotter is this whole M&A activity, We've seen a lot of M&A activity in the financial advisor space over the last decade. I think it's just getting started. I mean,
advisors buying other advisors, private equity funding advisor buyouts, right?
That's right. And aggregators, new aggregators. I mean, think about that headline we saw last week about the $129 billion Merrill team, that works with corporate executives. Now, when you look into those numbers, I read that maybe less than 30 billion is private wealth and the rest is corporate stock. But still, that's a gigantic team. It's unprecedented, I think, in terms of numbers. I think you're going to see more and more of that happening. And a lot of those firms will become the new aggregators that will compete with the ones that are out there today. And so I think there's a lot of choice. And just because of the demographic of the advisor being around my age or older, a lot of people are thinking about monetization. They're thinking about succession for their businesses. For most financial advisors, the business is the most valuable asset in their net worth. And so it's really important that we as planners plan for ourselves and our businesses so that not only are our families protected, but also our clients.
Yeah. Well, I mean, that's kind of the story of what you did in Vegas, getting bigger, growing to be the biggest RIA in Vegas. When you kind of think about, when you start getting close to like a $10 billion, Jimmy, I think, we've had advisors on the show from some of the big ones here in Chicago, representation from these massive roll-ups that are nearing hundreds of billions. But obviously, most advisors are in the camp where they're, quite a bit smaller, and they're trying to stand out, or they're trying to pass on their business. What do you think helps them stand out right now? What do you think are those characteristics that are going to make an advisor appealing over one when there's so much money looking to find a home?
Well, I can tell you that from my experience, I mean, for decades, I mean, ever since I got into business, I don't want to date myself, but I've been chasing the same thing really, which is to be more of a comprehensive advisor to our clients. So touching, the tax planning part of their financial planning, the estate and trust planning, and other things that involve money. And for the most part, I think advisors have just paid a lot of lip service to it. Now, I think there are a lot of great advisors that do regular financial planning, but because of tech and because of investments into our space, we're seeing, venture-backed companies like Wealth.com, which is the one we use, or Trust or Will, or Vanilla, kind of disrupting the estate planning world. And then you're seeing the same thing in the tech side. And so I think financial advisors really have an opportunity to up their game in terms of what we do for our clients to provide more services so that we're not just reliant on the portfolio management service that we provide, which in many cases ends up being a commodity.
Nice, interesting. I see. Jimmy, one of the big things that I took away from Robinhood Summit in particular, because they did a big deal with Trade PMR to kind of bring the traders into the advisor world. I wonder if there's a connection and kind of how you think about that, maybe from more of a client interface standpoint, where there's a lot of people who have made big gains in the market trading. They're active traders. Is that a potential market for, advisor kind of trends as well? Because it seemed like the message from the Hood Summit was, hey, you made all this money trading. Now you need to preserve it,
Yeah, I think it does. Not necessarily that advisors want to become traders, but I think in terms of trading strategies, using option strategies or other types of strategies to hedge risk, whether it's single stock, which there's products out there to do that nowadays, or other ways to hedge, the risk in positions that you've made a lot of money on, or to mitigate taxes. We're seeing a plethora now of tax mitigation strategies that are coming out there. That are out there now, actually, and some that were born out of Chicago, right where you're at.
Totally.
And I think those are innovative things that weren't around before, right? So the evolution of direct indexing, kind of supercharging the idea of maybe accelerating tax losses for clients and maybe offset capital gains that they may have in their portfolios. These are all things that
big theme right now. I've seen that.
We're talking about right now, and I think in the RIA space, we're privileged because a lot of these strategies come to us first. It takes them forever to try to get into a wirehouse or to a large firm or a bank, or so they come to the wirehouse. I'm sorry, the family offices and the RIA space first, and so we get first look. And I think in a few years, there'll be a lot more adoption across the industry. But some of these most innovative strategies come to the RIAs first, which we're very privileged to have that access.
Jimmy, finally, while I got you, I got to ask, I've seen some headlines on Vegas, prices dropping. Is it by the dip or what's going on? Is there any fringe of dwindling risk appetite out there?
Great timing on the question. I actually posted something on LinkedIn about the subject because I was recently with some friends of mine on the East Coast, and they're asking me about the headlines they read about Las Vegas with revenues being down. And quite frankly, for me, I wouldn't bet against Las Vegas, just like I wouldn't bet against places like Chicago or New York. You know, they're always going to bounce back and even stronger in most cases. And in this case, in my opinion, it's basically coming from the tensions from geopolitics and tariffs. My friends in Canada skipped their trips to Vegas this year, which we rely on Canadians to come to Las Vegas in the summers, especially. They didn't come, and or all year long, and also from Europe. And so I think it coincides with the trade tensions that we have. And so once that blows over, I think we're going to be right back to normal. Of course, prices have gone up, but I would say that Las Vegas is more of a mecca for people that want to live there or go there for entertainment than it ever has before. Think about all the professional sports we have. It started with
NHL.
And my friend reminded
me. The game we went, or the Las Vegas game we went to was packed.
Yeah, it was packed, and then you got the Raiders there for the NFL. We're gonna get the Major League Baseball, and then most likely an NBA franchise. We have the WNBA. My friend reminded me to mention that, and we've been talking about MLS for a long time. And the amount of wealth, F1, the amount of wealth that's come to Las Vegas is stunning. It really is stunning, and it's a very good place to be an entrepreneur. So it's a very business friendly and tax friendly environment.
You're making me jealous. I gotta go, Jimmy. I want to be. You know me. I'm always ready to be in Vegas. Actually, next stop is in December, I think, for Scott Bauer's Prosper Trading Conference. So might be seeing you then. Appreciate you, Jimmy. Good to catch up, sir.
Good to see you.
Thank you.